Now let's go into learning objective 9.4 and prepare a master budget for a manufacturing company. A manufacturing company must budget not only for sales but also for production and inventory needs. This requires careful planning for raw materials, labor, overhead, and finished goods inventory. We will now walk through each component of the master budget step by step. All master budgets begin with sales. The sales budget estimates the number of units expected to be sold and the expected sales price. The sales budget formula is the projected unit sales times the sales price per unit to arrive at total sales revenue. The sales budget is the foundation for the entire master budget because production levels are based on expected sales. Even though the sales budget significantly influences the remaining budgets, it is challenging to predict accurately and requires market research and knowledge of the customer base, industry, market conditions, and economic conditions, along with competitors and more. This slide gives us an example. Bob Willis expects quarterly unit sales to be 1,000 units in quarter 1, 1,200 units in quarter 2, 1,600 units in quarter 3, and 1,000 units in quarter 4. The sales price is $200 per unit. So sales revenue is calculated each quarter as units times price. This becomes the starting point for all other budgets. The production budget determines how many units must be produced. Companies must produce enough units to meet sales demand and maintain desired ending inventory. The production budget formula is sales in units plus desired ending inventory minus beginning inventory. That equals our units to produce. This ensures that the company has enough inventory to meet demand without running out of product. Let's take a look at the data from the Bob Willis example. Notice the projected unit sales of 1,000, 1,200, 1,600, and another 1,000 units by quarter. That comes from the sales budget that we previously computed. We add to that desired ending inventory in units, which is computed as 20% of next quarter's sales, which is an assumption management has made to represent the desired ending inventory on hand to avoid stockouts, but not have too much inventory on hand to result in too much carrying cost. We subtract for that beginning inventory units, which is the ending inventory from the prior quarter. So the first quarter will have to be given that information or know that information from the fourth quarter of the prior year. Now complete learning activity 9.3. Amore Artisan Hair Accessories plans to sell 2,000 bands each month in the first quarter at $10 each. Desired ending inventory is 25% of next month's sales. Your job is to compute the production budget for January, February, and March. Use the production budget formula and remember that each month's ending inventory becomes the next month's beginning inventory. Pause here and work through the activity. Once you've finished, check your answers with the solution provided in the back of Chapter 9. Now we move into the direct materials budget. The direct materials budget estimates the quantity and cost of raw materials needed for production. The goal is to ensure enough materials are available to meet production needs while maintaining desired raw material inventory. This budget includes materials needed for production, plus desired ending materials inventory minus beginning materials inventory, which equals materials to purchase. Then materials to purchase is multiplied by cost per unit to get the total purchase cost. Notice the example from Bob Willis. The beginning inventory or production needed comes from the previous production budget that we already computed. Now complete learning activity 9.4. Amore Artisan Hair Accessories uses two materials, thread at 4 feet per unit and beads at 50 beads per unit. The cost for thread is 25 cents per foot and beads are approximately 4 cents per bead. Units to produce for January are 2,500 bands, February is 2,000 bands, and March another 2,000 bands. Prepare the raw materials budget for the first quarter. Pause here and work through the activity. Once you've finished, check your answers with the solution provided in the back of Chapter 9. Now we move into the direct labor budget. The direct labor budget estimates the labor hours and labor costs needed for production. The formula is units to produce times labor hours per unit times cost per hour, which equals the direct labor cost. This budget helps managers plan staffing needs and labor cost expectations. Now complete learning activity 9.5. Amore Artisan Hair Accessories requires 0.25 labor hours per unit. The labor cost is $3 per hour. Using the units to produce for January, February, and March, compute the total labor hours and labor cost for the first quarter for Amore. Pause here and complete the labor budget. Once you've finished, check your answer with the solution provided in the back of Chapter 9. Now we move into the manufacturing overhead budget. The manufacturing overhead includes all factory costs other than direct materials and direct labor. It includes both fixed and variable costs. Some examples from the Bob Willis problem that we've been walking through are factory rent, utilities, equipment maintenance, indirect labor, indirect materials, and depreciation. The overhead budget estimates total overhead cost based on expected production volumes. That production volume typically affects variable costs. And you can see variable cost categories are gas and electricity, maintenance, indirect material, and inspections. Now let's look at the manufacturing overhead budget detail for Bob Willis. Notice that the fixed costs, gas and electricity, facility rent, production manager's salary, and depreciation, are even across periods. That's because the fixed costs are not driven or influenced by production volume. The variable costs, on the other hand, change. The variable costs are computed by taking the units produced at the top of the analysis and taking the units produced and multiplying those times the variable cost per unit, which was on the previous slide for gas and electricity, maintenance, indirect material, and inspections. The units produced is coming directly from the production budget. Hence, we must know production before we can compute the variable costs per unit for production costs. Now complete learning activity 9.6. Prepare the manufacturing overhead budget for the first quarter for Amore Artisan Hair Accessories. Be sure to separate variable overhead from fixed overhead and compute the total overhead for each month. Pause here and complete the budget. Once you've finished, check your solution with the answer provided in the back of Chapter 9. Now we move into one of the more complex budgets, the cost of goods sold budget. The cost of goods sold is the accumulation of the budget for direct materials, direct labor, and manufacturing overhead. When computing the cost of goods sold budget, we generally assume full absorption costing. Full absorption costing assigns all manufacturing costs to the product, including direct materials, direct labor, variable and fixed overhead. This allows us to compute the per unit cost of production. Then we can convert ending finished goods inventory from units to dollars. This is critical for the cost of goods sold. The cost of goods sold budget starts by preparing a per unit cost schedule, assuming full absorption costing. To do this, we take the total fixed and variable overhead costs and divide those by per units produced to come up with a cost per unit for overhead. Then we take the direct material and direct labor and divide those by units produced, or we can take that information off of our assumptions that we use to compute those respective budgets and tally up the total overhead per unit, direct material per unit, and direct labor per unit to get estimated total cost per finished unit. We'll use this to estimate our inventory costs later in the cost of goods sold budget. Now let's complete learning activity 9.7. Using the results from learning activities 9.3 through 9.6, let's compute the estimated cost per finished hairband. Follow the process shown in Figure 9.11 in your book. This includes direct materials per unit, direct labor per unit, overhead per unit, which are added together to equal total unit costs. The next step is to compute the ending finished good value. To do so, we simply multiply the estimated total cost per finished unit, which we just calculated, by the desired ending finished goods inventory in units, which we computed back on the production budget. Notice in the computations below, the ending finished goods units are given in the first row, and the cost per finished unit, which we calculated on the previous slide, is given below that. They're multiplied together to result in the ending finished goods value in dollars. The ending finished goods value is an essential element of the cost of goods sold budget. Let's pause and complete learning activity 9.8. You'll take the ending finished goods in units times the cost per finished unit to equal the ending finished goods inventory value. This value will be used later in the cost of goods sold budget. Now, to compute cost of goods sold, we also need to know cost of goods manufactured. That relies on material purchases, labor costs, manufacturing overhead, and inventory balances. The formula for cost of goods sold is a change in finished goods inventory plus cost of goods manufactured. So what is cost of goods manufactured? It's the total manufacturing costs adjusted for changes in work in process. Work in process includes partially completed products such as spoke, wire, rim steel, direct labor, and overhead for unfinished wheels in the Bob Willis example. Let's take a look at raw material used in the Bob Willis example and the computations. We take raw material purchases directly from the purchasing budget that we computed earlier. And then we can take the ending raw material inventory, which we had just computed, and the beginning raw material inventory, which came from a previous quarter. Now complete learning activity 9.9 for Amour Artisan Hair Accessories. Compute raw materials used for Amour Artisan Hair Accessories by beginning with raw material inventory of $1,850. And purchases come from learning activity 9.4. The ending raw material inventory is computed from the raw material budget. Pause here and complete the calculation. Once you've finished, check your answer with the solution in the back of Chapter 9. Now compute total manufacturing cost. The total manufacturing cost includes raw material used, direct labor, manufacturing overhead. The formula is raw material used plus direct labor plus manufacturing overhead equaling manufacturing costs. Let's explore the computations for Bob Willis. Notice raw material used is a function of raw material purchases plus change in inventory, which we computed on the previous slides. We add to raw material used the direct labor and manufacturing overhead that we'd also previously computed to arrive at total manufacturing costs. Now complete learning activity 9.10. Compute total manufacturing costs for Amour Artisan Hair Accessories using raw materials used from learning activity 9.9, direct labor from learning activity 9.5, and overhead from 9.6. Pause here and complete the total manufacturing cost calculation. Once you've finished, check your answers with the solutions provided in the back of Chapter 9. Now we can compute cost of goods manufactured, highlighted in yellow. Cost of goods manufactured adjusts total manufacturing costs for changes in work in process inventory. The formula is total manufacturing costs plus beginning work in process minus ending work in process equals cost of goods manufactured. Work in process includes partially completed goods, meaning they are not finished but still contain material, labor, and overhead costs. Now let's look at the data for Bob Willis. Start with the total manufacturing costs, which we previously computed, and add to it beginning work in process inventory, and subtract ending work in process inventory. That arrives at cost of goods manufactured. Now complete learning activity 9.11. Amour Artisan expects ending work in process inventory to equal 10% of the desired ending finished good balance. Let's first compute ending finished goods, a value we compute using data from learning activity 9.3 and 9.7. Now compute ending work in process as 10% of the ending finished goods that we just computed. Finally, compute cost of goods manufactured by adding beginning work in process and subtracting ending work in process. Pause here and work through the calculations. Once you've finished, Check your answers with the solutions provided in the back of Chapter 9. Now we can finally compute cost of goods sold. Cost of goods sold is based on cost of goods manufactured and changes in finished goods inventory. The formula for cost of goods sold is cost of goods manufactured plus beginning finished goods minus ending finished goods. This represents the total cost of products sold during the period. If we look at cost of goods sold for Bob Willis, you can see the cost of goods manufactured comes from the previous computations that we did on an earlier slide. Then we add beginning finished goods inventory, which we computed earlier, and ending finished goods, which we also computed. We compile all this data into cost of goods sold. Now complete learning activity 912. Compute the cost of goods sold for Amore artisan hair accessories using cost of goods manufactured, beginning finished good inventory, and ending finished goods inventory. Pause here and complete the computation and check your answers with the solution in the back of Chapter 9. Now we move into the selling and administrative expense budget. This budget includes costs that are not part of manufacturing. Selling expenses include sales commissions, freight out, and advertising. Administrative expenses include office salaries, insurance, office depreciation, or general office expenses. These costs are necessary for running the business, but they are not included in product cost for manufacturing. Let's take a look at the selling and administrative expense budget for Bob Willis. Data for commissions, freight, executive and office salaries, advertising, insurance, and depreciation was given in your chapter. The tally of those is the administrative and selling budget. Now complete learning activity 913. Prepare the selling and administrative expense budget for Amore artisan hair accessories. You need some data. Freight per unit batch is $10. There are monthly fixed costs of office salaries of $500, advertising of $300, and insurance of $50. Pause here and compute the total selling and administrative expenses for the quarter. Once you've finished, check your solutions with the answers provided in the back of Chapter 9.